Today, we're taking a deep dive into Mindray Medical. The company has just navigated what is arguably its most significant market pressure test to date. We're going to dissect the causes of this recent downturn and, more importantly, analyze the strategic responses that are now signaling a potential recovery. So, what exactly hit the company? Well, it was really a confluence of severe headwinds. First, an unprecedented cyclical trough that brought a sharp decline in both revenue and profit in early 2025. This was then compounded by major domestic challenges. We're talking anti-corruption policies that created a ripple effect of destocking and delayed procurement. And here's the critical point. The company's own operating leverage amplified all of this. What that means is the hit to their profits was significantly worse than the drop in revenue, putting immense pressure on their margins. And this is our core finding right up front. Despite all that pressure, the emerging picture is one of resilience. First, it looks like we've reached a potential inflection point. The data from the third quarter of 2025 is signaling that the business may have bottomed out, with a return to top-line growth. Second, the company's international expansion is proving to be a very powerful counterbalance to the weakness at home. And third, despite the acute short-term pain, Mindray's long-term fundamentals, its competitive advantages and strategic direction, appear to be fully intact. Okay, so to really understand these findings, we first have to quantify the downturn. Let's put some hard numbers to this market pressure test. Now, looking at the financial data, the trajectory is crystal clear. After very strong double-digit growth in both 2022 and 2023, you can see the deceleration in 2024 was stark, with profit growth slowing to nearly flat. This all culminated in the first 9 months of 2025, where you can see that sharp contraction in both revenue and net profit. And this chart here really visualizes the severity of that contraction. It's one thing to see it in a table, but this really shows what we mean by a growth cliff. Notice how revenue growth turned negative, but now look at the net profit growth. It absolutely plummeted. This is a textbook example of negative operating leverage at work, as those fixed costs weighed heavily on a shrinking revenue base. The result of all this was a classic and painful financial phenomenon known as a Davis double kill. You can think of it as a punishing 1-2 punch. Not only are the company's actual earnings falling, but the market also becomes willing to pay less for each dollar of those earnings. It's a simultaneous contraction that can have a disproportionately severe effect. So, amid all that difficulty, what was the first sign that things might be stabilizing on the domestic front? Well, it came directly from the source. On the Q3 2025 earnings call, management stated that the channel inventory issue, one of those primary domestic headwinds, has now been largely resolved. This was a crucial update. And that update leads us directly to this pivotal figure. Now, at first glance, 1.53% growth might not seem like much, but you have to view it in context. After consecutive quarters of decline, seeing a positive print, however modest, is a significant signal. It's the first concrete data point suggesting that the business may have finally found a floor. So, where did that return to growth come from? Well, when you break it down, it's a tale of two very different markets. The domestic market was still weak, no question, but the rate of decline slowed considerably. Meanwhile, the international market was firing on all cylinders, expanding by nearly 12%, with Europe showing particularly impressive strength. This global performance was strong enough to more than offset the lingering weakness at home. Okay, so that's the what. Now let's dig into the how. We need to dissect the core business itself to really understand the operational engines that are driving these results. Mindray's business really stands on 3 core pillars. First is patient monitoring and life support, or PMLS. This is the company's foundational business, where it holds a dominant domestic market share. Second is in vitro diagnostics, or IVD. Think of this as the company's high-margin cash cow, driven by recurring sales. And third is medical imaging, the high-end breakthrough segment, where Mindray is directly challenging the global giants with its advanced systems. Now, to fully appreciate the stability of that IVD business, it's essential to understand its core strategy, the classic razor and blade model. The idea is simple. You sell the primary instrument, the razor, at a low margin. You do that to drive recurring, high-margin sales of the proprietary consumables that go with it, the blades. The result is a highly predictable revenue stream and, crucially, very high switching costs for customers. And the importance of this model is becoming more evident every year. In 2024, the company reached a significant milestone. For the first time ever, revenue from the IVD segment surpassed the foundational PMLS business. This isn't just a growth story. It demonstrates the greater resilience of the diagnostics business against the cyclical downturns that primarily affect one-time equipment sales. This brings us to what is perhaps the most critical component of the company's current strategy, its new engine of growth, global expansion. The narrative here is fundamentally shifting from China for China to China for the world. Let's establish a baseline. In 2024, this is what the company's revenue mix looked like. It was still a majority domestic business, with about 55% of revenue coming from China and the remaining 45% coming from international markets. However, the strategic direction is clear. The company's trajectory suggests that international revenue is on track to become the majority contributor, set to exceed 50% of the total. This represents a fundamental transformation, turning Mindray into a truly global company and significantly diversifying its market risk away from any single geography. So how are they achieving this success in highly competitive, developed markets? It really comes down to three key pillars. First, they are securing high-end breakthroughs, contracts with top-tier hospitals in the US and Europe that create a powerful lighthouse effect for brand credibility. Second, they're building out localized operations, from direct sales teams to local manufacturing hubs. And third, they have a comprehensive portfolio that allows them to offer integrated solutions for entire hospital departments, which is a major advantage over single-product competitors. Finally, we have to turn to the complex domestic policy landscape. And the key question here is whether the current policies represent short-term pain for a much larger long-term strategic gain. A key policy to understand is volume-based procurement, or VBP. For a market leader, its logic really unfolds in three steps. Step 1, immediate price pressure. Centralized procurement forces significant price reductions, which hurts short-term profitability. But that leads to step 2, market consolidation. Smaller, less efficient competitors are unable to compete at these lower prices and are forced to exit. Which brings us to the final step. The market leader is positioned to capture that vacated share, leading to higher volumes and cementing long-term market dominance. And beyond VBP, other broad healthcare reforms are also shaping the market. Policies like DRG/STIP, which implement bundled payments based on disease diagnosis, create a powerful structural incentive for hospitals to control their costs. This systematically favors the adoption of high-quality, yet more cost-effective domestic equipment, creating a significant long-term tailwind for a company like Mindray. So as Mindray emerges from this cyclical test, the critical question is no longer just about recovery. The data suggests that process is underway. The real, forward-looking question is about the new balance the company must strike, a balance between a maturing, policy-driven domestic market and its accelerated global ambitions. How Mindray navigates this duality will be what defines its next chapter.